by him, so he's going to actually believe what I have to say up here, until the car was stolen by someone when his son was at uni. So it's a little red racy country car, because I was a girl from the bush back then. So there you go. It's great to make connections. A bit of useless information you didn't need to know, but it has given a few of you a few more minutes to get yourself settled down the back there. So we started our first session. We ended our first section focusing on the Perth Basin. And that's where we're going to start session number 2 today. ASX listed Warrego Energy is an ambitious exploration, development and production business, which has a very significant potential in Spain. However, the focus for this fellow here, their CEO and MD, Dennis Donald, and yes, he would be a Scotsman. He's slightly jet lagged, so please play nicely with him. Here at RIU is their Western Australian assets. It's where he and his head rock geek, Paul Robinson, who you may, where's Paul? Where'd Paul end up in the audience? Or he's up the back there. Okay, so Paul is his head rock geek. I have on good authority. They believe that here in WA is where they have some assets that we are going to be very, very interested in as a collective, including the world-class West Erregulla field. Will you please make him very welcome?
Thanks very much. You hear me okay? Well, good morning, everyone. There's a lot going on in the North Perth Basin, and you heard from our JV partner, Strike, before the break. I'd like to talk to you today about Warrego's ability to grow its reserves and resources, not only in 469, but the substantial exploration potential in our EPA 0127 block. Usual disclaimer, you can see this on our website. Warrego's strategy is focusing on identifying, appraising, and developing a high-quality portfolio of natural gas, power generation, and potential hydrogen and CCS projects in Australia and Spain. Energy policy throughout the world is rapidly changing in response to the need for energy security, which is having a positive effect on our activities and portfolio. And in fact, I'm not talking about Spain today, but the changes in Europe are absolutely staggering. We're also conscious that gas is the primary transition fuel for many economies, and we're aligning our business so that we can achieve net zero by 2050. We also have significant potential in Spain, which we'll expand on in subsequent forums. This matrix gives a good summary of our strategy and activities. And as I've said previously, today I want to focus on our activities in Western Australia, particularly in 469, where we're developing the West Erregulla gas project and evaluating further high-grade exploration targets and the massive exploration potential we have on EPA 0127. I'd like to say a little bit on carbon zero strategy, which is relevant to all of the operators in this forum, I suspect. While our current emissions profile is negligible, we're developing a carbon strategy that can evolve with the company and our projects. We're currently adopting a new framework and establishing a baseline data. Each project will have its own carbon strategy. For example, West Erregulla gas processing emissions will be managed by AGIG. And we've also implemented a series of solar projects in Spain, not unnaturally. So coming on to EP 469 and unlocking the future growth potential. Drilling in West Erregulla 3 and Strike Energy's South Erregulla 1 supports the recent independent resource certification by NSAI and has really highlighted that the West Erregulla gas field has further reserves to be gained. This is a photograph from the actual flare. I know Stuart's very proud of that. W3 drilling and testing has demonstrated the outstanding nature of the northern part of the West Erregulla field. It confirms that we have 100 meters of gas column, 100 meters of gas column. It also confirms quality reservoir, high gas saturations that have given rise to exceptional stabilized flow rates and flowing wellhead pressures. And it also supports the assumptions in the NSAI July 2022 certified reserves upgrade. And we're currently, with our joint venture partner, evaluating data and samples from the well test. And in fact, we believe that the South Erregulla may unlock more reserves for West Erregulla. I'd like to point out that further reserves increases are indeed possible in the southern extent of the central area of the West Erregulla. South Erregulla 1 as reported by Streitberg Energy, encountered gas that's connected to the West Erregulla. Warrego's recent remapping indicates a potential increase in rock volumes above the likely gas water contact of 4630, and this could translate into a potential reserves increase that was not assessed in the recent NSAI certification July 2022. So we still think there's a hell of a lot more in 469. And as an example of this, I'd point out the Erregulla Deep. Erregulla Deep is in the northeast area. It's situated between West Erregulla and Lockyer Deep. And I suspect there's not many people in this forum won't know about the tremendous success that Lockyer Deep was. Warrego's estimated unrisked prospective resource, this is Warrego's unrisked prospective resource of Erregulla Deep, is between 160 and 400 BCF. As a further example, if you look down in the southwest corner of EP 469, is the SundaGas structure. It's recently been identified by Streitberg as an extension of the South Erregulla structure. We really do believe that 469 has a lot more treasures to reveal. And in terms of our gas reserves growth pathway, we think there's a potential for more reserves in West Erregulla, as well as a number of adjacent structures. As I've said, example being the Erregulla Deep. And we're very keen to capture the 3D seismic. It's maybe not commonly understood, but only 1/3 of 469 has been shot by 3D seismic. And the intent is to shoot the further 2/3 of that block next year. Look, this morning I'm mostly discussing subsurface potential today, but I wanted to provide a quick summary of where we are with the West Erregulla gas project. And going down to the last bullet point, first gas is anticipated by the end of 2024. Moving on to 127, and until today's, we haven't really said too much about it. And we're actually quite proud to be rolling it out now. Now, I'm not a rock geek, as we said at the start, but Paul's here with me. So if any of you that are of that disposition would like more information, please get a hold of Paul later on and ask him the difficult questions that I almost certainly won't be able to answer. Warrego's EPA 0127 block is in the final approvals phase, and I'm making a bold statement here. It has the potential to be the next Perth Basin. I understand that people say, wow, that's optimistic. But the same was said of 469 when I founded the business 10 years ago. And the fact of the matter is, at that time, the only other people that had the faith was Streitberg Energy. So a bold statement, that's fine. That's the statement we're making. So what about 127? Well, EPA 127 is situated directly to the north of the Perth Basin. It's a massive block, 2 million acres. In fact, if you say to Scottish people the block's 2 million acres, their eyes glaze over. That's a fifth the size of my country. You live in a very big country. I don't live in a very big country. It straddles almost the entire Cooper sub-basin, and importantly, it's bisected by the Dampier-Bunbury gas pipeline. We're absolutely delighted that Mitsui Exploration and Production have agreed to farm in. With Mitsui farming in, we have an excellent partner, access to technology, and world-class capabilities. And importantly for us, a partner that's a member of the Northwest Shelf. Permit grants anticipated at the end of 2022, and an accelerated work program is currently being planned. And it is accelerated, and it is pretty ambitious. Now, moving on to the general rocks inherent in 127. As seen on this regional gravity image, the Cooper sub-basin is the link between the North Perth Basin and the onshore Southern Carnarvon Basin. It's an estimated 4,000 meters of sedimentary section that exists below 127, so significant. These sediments, as seen to the south and north, are likely to comprise of known prospective Permian and older age reservoirs and source rocks. Recent gravity and magnetic data processing and modeling have identified multiple positive anomalies extending the length of this considerable permit area. These anomalies are likely to be massive structures within the sedimentary sequence and are likely to be similar in size to those known in the North Perth Basin. This map shows the relative scale. So, extremely large block. The Cooper sub-basin is asymmetric, with a deep potential kitchen area along the entire eastern margin. We believe that potential expelled hydrocarbons would migrate up dip to the west. The identified gravity anomalies, tens to hundreds of square kilometers in area, are well situated to receive charge. And the approved 127 work program is comprehensive, with the first 3 years comprising extensive gravity, magnetics, and seismic acquisition. Stratigraphic and exploration well drilling will form the second half of the exploration program. I hope this very short talk, it's short and sweet, just like myself, has indeed summarized the significant potential that Warrego has in 4.6, not only in 469. Just to remind you, we've still got another 2/3 of the block to shoot with 3D seismic, and in its EPA 127. And I hope I've also explained to you in general terms the direction of the company. Thank you.
Good on you, Dennis Donald. Thank you. I hope it was worth your getting onto an aeroplane and coming all the way over here from Scotland. What's the weather like compared to your summer Scottish weather at the moment?
Listen, we operate in 3 regions in the world, which is near Cadiz and Western Australia. And of course, I live in Scotland, so I'm not doing too bad for locations in the world.
Yeah. I can hear you're struggling. Go and grab yourself a chair out there and put your hands together for him again, please, everyone. I'm impressed that your baggage made it here as well, too. That's good. All right, team. Our next presenter is blessed with a giant gas resource. And I smile as I say that. It could be taken in so many ways, couldn't it? But he's blessed with a giant gas resource, potentially a big deal with China as well, with the why and the how and the why and all the details in between. Would you please welcome to the stage from Bondi to the Gobi Basin to here in Perth, Brendan Stats, who is the CEO of TMK Energy. What this man doesn't know about Mongolia apparently has not been printed or put into Google. Please make him welcome.
Thank you very much for the introduction. Yeah, so my name is Brendan Stats and I'm the CEO of TMK Energy Limited. TMK Energy Limited is an Australian oil and gas exploration company, and we're focused on 100% owned Gavantes coal seam gas project located in the South Gobi Basin of Mongolia. So I'm not sure how many of you have been to the South Gobi Basin of Mongolia. Probably not that many. It's not really on the tourist trail. So I just sort of put up some pictures and a bit of a video just to give you a feel for the environment and the landscape of our project in the South Gobi. And just while I introduce myself, so I'm a geologist by background, and I've lived and worked in Mongolia for over 10 years. My work in Mongolia has primarily been focused on coal exploration and mining. So Mongolia is well known for its large coal deposits. There's significant deposits in the South Gobi, Tavan, Tolgoi, Nara and Sukhot, where there's extensive coal mining. But no one's really looked at these coal deposits for their coal seam gas potential until recently, in the last couple of years, where there's several Australian companies really bringing the expertise from Australia, evaluating the potential of these coal seam gas of these coal fields for coal seam gas potential. And TMK Limited is one of those companies leading the charge in Mongolia. So we see there's enormous potential in Mongolia in these coal fields for coal seam gas potential. But the other key advantage is its proximity to the largest energy market in the world in China. China's a very large and growing energy market, and with a particular appetite for gas. And there's obviously significant advantages in terms of delivery cost in finding gas in Mongolia and delivering it to China. So that, in a nutshell, is TMK's mission. We're out to find a giant gas resource on the doorstep of China. So this is just a quick snapshot of TMK and a bit of background on the Gavantes project. So I've been involved in the Gavantes project since its inception in January 2019, when we were awarded the prospecting agreement. Over the last couple of years, I'll just go through some of the key highlights. So we signed a farming agreement with Talon Energy, who you'll hear from later this afternoon, to fund the first 2 work programs. We obtained the production sharing contract and exploration license in 2021. And then in 2022, TMK Energy acquired the Gavantes project. So we acquired the project in February, and we started drilling in March. So we've been drilling for the last 5 months, and this is the first coal seam gas exploration which has occurred in this part of the South Gobi Basin. And the exploration program is five exploration wells, of which we've completed 3.5. And we've currently got 2 drill rigs currently drilling on site to finish the program. And we expect to finish that program in the next couple of weeks. Looking forward, we complete the exploration program. The results from the exploration program feed into our maiden contingent resource estimate, which based on the results, which I'll go into in more detail, but we expect that to be significant. And then based on the early success from the exploration, we've commenced the planning for a pilot well program, which will kick off this year and flow gas to surface early next year. And that's where we'll get our picture of the gas flare. So I guess 2022 has been a transformational year for TMK with the acquisition of this Gavantes project. So just a little bit more detail on the actual Gavantes project. So as you can hopefully see from the tiny map up there in the corner, it's located in the very south of Mongolia, and it's actually 20 kilometres from the border with China and a designated border crossing. And you might be able to make out there, but it's also located close to the existing gas infrastructure in northern China, with the main west-east pipeline running 400 kilometres to the south. And as you might have appreciated from the earlier video, in terms of surface constraints, there's no towns, there's no people, there's no rivers, forests. So in the way of surface constraints, there's very little, and it's quite an easy place to do exploration. There's basically camels and rocks and a few operating coal mines, and that's about it. So easy to do exploration. So the other key advantage of this project is the geological understanding. So the geological understanding is reasonably well defined from the extensive exploration which has occurred in the last 15 years for coal in this part of the basin. So we have access to, we've collated 2,500 drill holes. And those 2,500 drill holes just roughly talks to a cost of say 100 million US in terms of drilling costs, but more importantly probably saves us 5 to 10 years in terms of greenfields exploration. So the geology is reasonably well defined. So that's given us a real head start with our exploration and enabled us to really focus on the coal seam gas aspects. And the geological understanding is also the basis of a prospective resource estimate of 6 TCF or 6 trillion cubic feet of gas. So very big prospective resource and completed by Netherlands Sahul. So it's 8,500 square kilometres. So it's a big project, big potential, big prospective resource. And this year we've gone about proving up that potential. So onto the results of this year's program. So I've just presented the results from the four wells. One of those wells is still drilling at the moment. There's 2 coal seams, an upper and a lower, and we've intersected the upper coal seam and we're still drilling to the lower coal seam. But these are the results from the first 4 wells. And we call it 100% success because all 4 wells have intersected thick coal with high gas saturation. The gas is high methane, 96% average, low CO2, under 2%. And then the permeability in a mixed bag, but the upper seam, for example, has delivered permeabilities between 20 and 47 millidarcies, which is very high. So these are the key technical parameters for a coal seam gas project, and all 4 wells have delivered exceptional results. So that's why we call it 100% success rate. The other important aspect of this is that those 4 wells are located approximately 2.5 kilometres apart. So they're spread across a basically 10-kilometre strike. And we knew the coal was there from the existing data set and the operating coal mines, and we've focused on a relatively small area this year, but we do know that the coal extends another 150 kilometres to the east along strike. So we've started at the western portion where the coal outcrops, and this year we're focused on this area, but we do a 10-kilometre area, but we do know that the coal continues for 150 kilometres. So looking forward, we expect more success with the exploration. And just some of the other key points here, at the coal thickness of 60 to 90 meters, like that's very thick in terms of coal and particularly coal seam gas. So very, great results. And I guess just to put the results into context, I've put them in a table here, which might be a bit too small to read, but this is comparing our results with the major coal seam gas fields worldwide in the US and Australia and China, and just looking at the key technical parameters. And I'm not sure whether you can read the detail there, but in summary, the results we've achieved are equal to or better than these existing developed coal seam gas projects all around the world. And I guess a key feature of the project is the coal thickness and the high gas contents. We're talking 60 to 91 meters there. Coal seam gas can be developed in typically 5 to 20 meters of coal, and the gas content's very high. So, and I guess what the results point to, really looking forward to development, is simple, inexpensive development with high production rates and high operating margins. So that's really what the the results are pointing to. Of course, we have the size and scale, 6 TCF, and very few surface constraints, as I've mentioned. But the other key advantage of the project, as I touched on earlier, is really the location and the access to markets. So I'll just focus on the markets for a second. So currently, where we're drilling, within 5 kilometres of where we're currently drilling, there's 20 to 30 megawatts of demand for power, and that's associated with the operating coal mines within our close proximity to where we're drilling. And their forecast growth in demand for power is 60 to 70 megawatts. If they can get reliable power supply. They currently operate on diesel generation and a small power line from China, and so that's a very good opportunity for early commercialisation of the project. We'll be drilling the pilot well program later this year, and hopefully flowing gas early next year. And any gas we can produce can be used on site to support those mining operations. So that's just the early commercialisation opportunity while we look to develop or evaluate a much bigger development program. And just in Mongolia in general, there's numerous applications for domestic gas in Mongolia. But without going into detail, I guess it could just be summarised by there is a very strong desire for domestic production of low cost, reliable, cleaner energy, and we think we can feed into this market as well. But for a big gas project, you need a big gas market, and fortunately, we're right next door to the biggest market of them all in China. China's energy demands are significant, and the challenges they face meeting those demands are significant. So there's plenty of information out there on the Chinese gas thematics in terms of forecast gas demand and supply deficit. And the key is, I think, we are well placed, being 20 kilometres across the border, to feed into that market. And China currently gets its gas through pipelines from Turkmenistan, Russia, Myanmar. And so in terms of geopolitical risk, those three are probably up there, whereas 20 kilometres across the border in Mongolia, existing trading partner, very good relations, Mongolia, China, so a number of advantages there. And a significant cost advantage, as I mentioned, in terms of delivering gas into China. So how are we going to deliver gas into China? So recently, as last month, we signed an MOU with PetroChina Daqing Tumsug, which is a 100% subsidiary of PetroChina. And so PetroChina Tumsug are an existing operator in Mongolia. They're the operator of the oil fields in the eastern Mongolia, and the only developed oil fields in Mongolia. They've been there since 2008, so they're an experienced operator in Mongolia. And the other important, and PetroChina, under the PetroChina umbrella, they have access to all sorts of resources which can facilitate the development of our project. And they have experience here with the full breadth of the value supply chain, exploration, development, infrastructure and markets. And infrastructure and markets probably being the important ones for us. And importantly, PetroChina owns and operates that gas pipeline network in northern China, close to our project. So, and I think being able to introduce a major like PetroChina to our project at the very early stage, we talk about we drilled our first well in March. I think that talks to the quality of the project and also the potential scale of the project. So this is the plan that we put out at the start of the year, and the drilling's been a bit slow, and there's been all sorts of things. But in actual fact, we're hitting our milestones. So this is a plan we said we'd implement at the start of the year, and we've hit these targets. And so looking forward, the next steps, we'll complete the exploration program in the next couple of weeks. That'll feed into our maiden contingent resource number, as I expect in October, which we expect to be significant. And really summarise the results to date and put them into a simple 2C number. And then we kick off the pilot well program. And the pilot well program is really about delivering gas to the surface and demonstrating the commerciality of the project. And so just when we step back and look at this timetable, so we acquired the project in February, we started drilling in March, and we aim to flow first gas to surface early next year. So as I mentioned, we're moving very quickly through the early exploration evaluation stages. Within 12 months, we've taken the project forward, giant steps. So the investment opportunity, I think we've got the project. The size of the prize, 6 TCF on the doorstep of China. That's the project, and we've been able to deliver on the exploration results, proving up that potential. We've got the near-term catalysts. We've had a busy year, and we've got a busy next 12 months. There's a lot of news flow to come out, and contingent resources, pilot well, first gas, early commercialisation. So there's a lot of near-term catalysts, and we're also well funded through implementing this plan via the cash in the bank, but also our farm out agreement with Talon Energy, who will be funding the pilot well program. So it's I think it's a very exciting time for TMK, and I think we present a unique opportunity for early stage exploration and evaluation, which is delivering on results, and identifying a big project, as we set out to do, identify a big gas resource next to a big market. So just quickly on a corporate snapshot, the management and board is comprised of Australians and Mongolians with the relevant skills to move the Gavantes project forward. And Dougal Ferguson's here today, and Stuart Baker's also around. So if you know those guys and you want to chat more about TMK and Gavantes, please feel free to grab those guys. The usual disclaimer, and this presentation will be available on the web. So I encourage if we've tweaked your interest, please look at our website and look at the information online there, or come grab me. I'll be around the conference today. So always happy to chat and answer any questions. So thanks very much for your time.
On you, Brendan. How's your jet lag going? Adding the 1-year-old baby to that as well. I was thinking of poor old Dennis coming from Scotland, but you've been travelling around and you've got the 1-year-old baby. How are you coping?
It's good. It's good to get to Mongolia.
Yeah. That's why I come. I've got 4 kids at home. I come here for a break and to listen to you guys. It is, but your voice is beautiful. I was thinking if it was a 1-year-old, it'd just be going quietly, beautifully to sleep, believing every word that you said. I've got the gift. Thanks for coming today. Thanks for taking the time, and look forward to hearing about more information in the years to come too. We're going to stay overseas with our next presenter, and this is another location that I'm going to say, I'll take a stab and say many of us may not have visited this place. We're going to Timor. SundaGas Banda is a subsidiary of London AIM-listed Baron Oil plc. Now, this company is focused on maturing and developing the large Churich gas discovery in the prolific Plover Formation, which is on trend with Bayo Undan, Greater Sunrise, Evan Shoal, and also Barossa. This is their first time at RIU. They've heard good things about us, and they've heard good things about this conference. So let's make him really welcome. This gentleman is Dr. Andy Butler. He is the Managing Director of SundaGas. Please make him welcome, everyone.
Thank you, Chrissy. Thanks. You're quite right. This is my first time at an RIU. It's great to be here. It's a real pleasure, and it's great to see so many familiar faces. I'd forgotten how many people I knew in Perth, and so having a really good catch up. So yeah, my name is Andy Butler. I'm the founder and managing director of SundaGas. And I'm here really today to talk to you about Timor-Leste, and in particular our Tchacos gas field that we have there, and really to raise awareness of that project and hopefully show you some interesting aspects of what we're trying to do. So here's some highlights of what I'm going to cover in the next 14 and a half minutes. The Tchacos field is a very large gas resource. We believe it's in shallow water, obviously located on the prolific Plover trend. We've spent the last couple of years reprocessing, a very extensive 3D seismic survey that covers that old discovery. That work is just about complete and is looking very, very encouraging. And we're presently interpreting that. And so I'm going to be showing you some real hot off the press information from what we're doing there. Initially, we think we're dealing with a in-place gas resource. I say there 4.5 TCF. I think it's probably about 5 TCF of gas in place, and a concentration of those resources into the key discovery that Shell made 25 years ago. So a really material resource. People always ask me, yeah, great, you know, you're stuck in the middle of the Timor Sea. What are you going to do with it? Well, I will show you. I think we have multiple export options for that gas. And so we're looking forward to completing our present evaluation phase and going into some appraisal drilling next year. And we're out offering opportunities for people to join us in doing that. But first of all, a brief introduction to Timor-Leste. I mean, it is obviously your immediate neighbor. But I suspect, as Chrissy said, that probably very few people here have actually been there. And I'll make a plug, first of all, for Timor-Leste. It's a young, vibrant, open country. Many of you are probably aware of the very traumatic history that they've had during our lifetimes. But it's also, it's a beautiful country. It's wonderful people. It's got the best coffee in the world. And it's just up the road. I'm sure you've all been to Bali and never been to Timor. I highly recommend a visit and a tour around the place. It is a country that's poor. It's got substantial development challenges. Its economy, since independence, has been solely really reliant on the Basin field operated by Conoco and then more latterly Santos. That's weeks away from decommissioning and is expected to convert into a CCS facility. And you see that often in the news, the activities that Santos are carrying out there. Since Basin came on, a sovereign wealth fund, the National Petroleum Fund, has been established, and that has, but that is now being drawn down. So there's a lot of pressure from governments to move forward with these other assets. And the only other substantial fields offshore are Greater Sunrise and as I think I'll show you, Shoreditch. SundaGas itself, we operate that asset, what you can see on the map there, with a 75% working interest. We partner with the national company known as Timor Gap. They have representatives here as well. I encourage you to chat to them. And our parent shareholder is a London-listed company called Buru Oil, listed on the AIM exchange. So if you're interested in what I've got to show, then that's where you should look. We have a good presence in Dili with a team that's established and shown there. Just a bit of background and context on what's going on in the Timor Sea. So we're, as you're probably aware, Greater Sunrise, operated by Woodside, now majority owned by the Timorese government through Timor Gap, and there's an ongoing story there that I won't go into. Santos is a key player in this region, of course, having bought Conoco's assets, which includes Basin, which they converted to CCS, Barossa, which is now well into development phase, and of course Darwin LNG and a lot of the infrastructure in between. Another key player is Eni, who operate the very large Evans Shoal field and partner with Santos and have an MOU to really take the gas resources in this basin forward, and who have been awarded very recently the block just to the north of us inside Timor-Leste waters. And as you've seen also in recent press, of course, there's a lot going on in the CCS space with awards of acreage to the south of us. The overriding point, of course, is the gas prices that we're benefiting from in this part of the world. Okay, so Shoreditch gas itself, we're in the core of the Plover trend. We've got great reservoirs akin to what you see in Basin. We're just along strike from it. We a well drilled by Shell in 1998 in shallow water, 65 meters, discovered gas and the normal pressures at about 2,900 meters. As part of a trend, I'll show you, that's about 60 kilometers long of discovered rather, and prospective resources. LNG scale resources, it's a great operating environment and good PSC terms. Okay, just there's a little bit of geological content within the presentation. I am a geologist, but I'll explain briefly what we're looking at. So this is a regional transect across the area where we're operating. You'll see from the index map, we've got Sunrise off to the north of us. This big feature through the center of the profile there is known as the Melita Graben, a deep basin that's developed, and we're right on the flank of that. The orange is the Plover sandstone, regionally very continuous, very good reservoirs. And overlying it, where we are, the purple section are lower Cretaceous shales, mud rocks that are fabulous regional seals, and all hydrocarbons around us stay underneath that. So we have a really good petroleum system that operates. And the map on the right-hand side, the 3D visualization shows that effectively where we're sitting is on a spur that comes southwards off the Greater Sunrise High. Greater Sunrise obviously is a world-class gas condensate resource. The map on the right is our petroleum systems work. Red is gas, basically where we think it's coming from and where it's going to. Ultimately, a lot of it is going northwards to Sunrise, but you'll see that Shoreditch and our PSC is optimally located for the maturation and migration of gases into the structures that we identify. So what does this gas resource look like? What have we discovered? So, rather, what did Shell discover 25 years ago and not do anything with? Well, they drilled a really interesting well. The log on the left-hand side, yellow is sandstone, and you can see that it's almost all sandstone, and they had and it carries on below the bottom of the well. So well over 100 meters of very high quality sandstone. They drilled some way away from the fault that you'll see on the cartoon on the right for operational reasons, and they decided to drill a vertical well from an optimal surface location and encountered about 30 meters of gas, about 25 meters of net gas in this very good sandstone. And so the whole hypothesis of what we're doing going into this is to say, well, what happens as you go from that well off to the fault? And as you can see from this cartoon model, really we see that there's a big wedge up dip of very significant gas resource potential that's there. The real challenge we had is that data was very poor and you couldn't really see what was going on between the well and the fault. The orange box indicates the quality of the reservoir. We had a great 101 on permeabilities this morning. The average permeabilities here are about 200 millidarcies within that pay zone. The maximum permeabilities are more than 1,000. So as we learned, that's a great place to be developing gas. Okay. So our sort of primary activity has been to look at reprocessing the old seismic data to really visualize what's going on between the well and the fault there. The cartoon map shows that all the features that we'd identified from the old data. You see in red the discovery and the well, which is somewhere away from the fault, and in orange all the other prospective features around it that are at the same level and the same reservoir, same sort of depths, etc. Okay. Across all of that, on the original data, we were looking at about a gas resource of 3.5 TCF recoverable as a mean resource. But imaging uncertainty meant we didn't have a great confidence of that, and it was all considered prospective despite having a good discovery in there. So we've reprocessed just under 1,300 square kilometers of 3D data, the blue rectangle there, which is basically all that's available on the area where we're operating. And that work is just about complete. So here, I will show you some seismic examples of what we're dealing with. These are three the same profile with different data sets through the discovery. So the well, you can see the vertical line in there, and the plover sandstone is the section right at the base. The line on the left, this is in time data, is really very poor quality. What happens in that area between, I should attempt to indicate this, between the well and in here, it's noisy. You may not all be geophysicists, but I can tell you that there's extremely poor data. The data in the middle panel there is essentially what we're receiving at the moment, and there's a lot more clarity in that data and definition of the fault. And the data on the right is effectively an optimized version of that as well, where we're really homing in on the relevant frequencies and parts of the data that are relevant to imaging the plover sandstone. And you can see we've now got a product we can work with. And so we've now got maps of which we have a great deal more confidence. Okay, there's a lot of work that takes you from that to this, and everything here is very much hot off the press. The rectangle that you can see with the colors within it, that's the 3D outline area we're dealing with. And really what these colors are showing is just the thickness of plover sandstone above the closure point of the gas water contacts in the discovery and the adjacent features. The polygons also go off the ends of that rectangle into the broader data that's available, and we're integrating all of that at the moment. And really what the data is pointing at, and I say this is all very provisional, is that we are seeing, we are validating the Shoreditch discovery as a very material resource. We are seeing a concentration of the gas resources that we'd envisaged previously into that discovery. And we are seeing that the discoveries that go off the end of the 3D are also looking very robust. And so in total, I indicate there, we think there's a gas in place number in the order of 4.5 TCF. If anything, we think that's an underestimate from the very latest data the very latest mapping that we're presently undertaking. So hugely encouraging. With recovery factors in sort of 60–70%, you can see that we're dealing with a very, very significant resource here. Okay. So this is the well that we hope to drill. I hope to drill late next year. Basically twinning at surface the shell discovery, but at about 1,100 meters after 13/3/8, taking a dog leg and following the fault trajectory to go up dip so that we encounter in excess of 100 meters of gas pay, and are really targeting proving up a resource with that well of about 1.2 TCF. Okay, the well cost we're expecting is about $24 million, but that includes a full test, which obviously is something we're anticipating doing given the nature of this discovery. So then what? As I'm back to my earlier question. So you've got this great gas resource, you've got to take it forward. Just very quickly, there are many advantages to this asset. Unlike, for example, Sunrise to the north of us, there is an existing PSC. There is not a maritime boundary issue in the middle of it. There's one government to deal with. We've got very large gas resource. We're in shallow water. The blue chart there illustrates the water depth, for example, of Barossa, Sunrise, deeper, more expensive developments to carry out, and Abadi is off the scale. It starts at 700 meters or so. And also we have solutions around CCS, which I'll come to in a moment. So where will it go? And the answer is essentially, we see a multitude of options for exporting gas from this area. We are certainly not dealing with a stranded gas resource. We're in the middle of the Timor Sea. There are routes to the north of us, there are routes to the south of us, and there are routes directly to market standalone. Going northwards, Sunrise, if it gets developed, takes us towards a greenfield LNG on the island of Timor. There were lots of questions around that. Southwards, sorry, last orders. Southwards with Darwin as possibilities, and also standalone at Chuditch, which I think it offers many advantages. And standalone at Chuditch essentially looks like this. What I mean by that is a hybrid floating LNG solution, but level onto platforms. So a series of wellhead platforms, unmanned, tied back to a central facility with a floater there. The facility shown off to the left, a Bioundan, which as said is becoming a CCS hub for the area. That's a possibility. Another possibility is actually, as I'll show, I think, in my next slide, there are several other options to do with CO2. I should have mentioned there's 18% CO2 in Chuditch gas. That's exactly the same level as you have in Barossa, for example. It's something that we have to work with. And we have a number of solutions. One is to take it to Bioundan. It's about 130 kilometers, requires a pipeline and presumably a tariff. One is to go to the facilities that are going to emerge to the immediate south of us with a recent licensing round. But actually, my preferred solution is to convert or to use Chuditch also as a CCS facility to inject for enhanced gas recovery and potentially take third-party gas in there. So that's what I wanted to cover. We think we've got a very significant gas resource on our PSC in that area. We've completed the 3D reprocessing. It's looking hugely encouraging. We're evaluating those data and all the other geological studies that we've carried out, and are looking forward to drilling a well next year. We see this as a potential very high value development of shallow water gas in this region. We see multiple options, and we'd love to talk to anyone interested to learn more. We have a booth, slide 18. I'm out there, as is my colleague Dino Gandara, and thank you for your attention.
Thank you very much, Dr. Butler. I hope you enjoy your time here. And he's off to Dili next, so I can speak to you more about that as well if you want to out there. Now, our next presenter is one of those gentlemen that I always enjoy listening to. He's very passionate about exploration, building value for all stakeholders, and I like to consider him one of those men with integrity. He's a geophysicist by training. He's also responsible for the formation of a number of Australian listed companies. Today, he's here in his capacity as the executive chairman of Buru Energy, and that's a big gas discovery in the Canning Basin. And he may just touch on the success Buru is having with a little side hustle if you've got time today. Would you please make welcome, everyone, Eric Streitberg.
Well, thank you very much for that completely unsolicited introduction. I've been, I think, to every one of the good oil conferences since I started. I think I missed one through misadventure. But this is probably going to be the last one that I'm presenting on behalf of Buru. And that's because our new CEO, Thomas Nador, who's in the audience, I think somewhere. Thomas, yep, up the back there, who you may know through his role in Beach as their development manager for all their assets across Australia. So Thomas has recently started with us, and that's going to give me the chance to step back a little bit and focus on new ventures and development. So why would Thomas come and join us right now? Well, apart from the fact that Buru is a great company and his chairman is a great guy, that would be me, of course. We're the oil and gas sector is coming up back to life after some very dire couple of years. And I think it was Mark Twain who famously said, "The reports of my death have been greatly exaggerated." And that's pretty much where we are in the oil and gas business. Let me see if I've got the right buttons to push here. No. Where am I? No. I apologise. I should have taken a lesson. Thank you. And this pretty much illustrates how we're coming back to life. The 1 year Brent price and the 1 year European gas price. If you saw this in any other commodity, the market would be following it pretty hard. If you look at lithium, cobalt, and all the rest of the so-called green minerals. And if you look on the right side, there's the 5 year graphs. So the 5 year oil price, Brent's essentially doubled since 2018, and the ASX 200 energy is flat to 2018. So that tells you we've got a long way to go to get back to where our market value should be. Let's try again. No. What is going on? Yeah. Apologies. It's not working for me. Why? Yeah. No. I've got it. Got it. Thank you. Apologies. So what do you look for when you're going to invest in a small oil and gas company? Now, I'm very heavily invested in Buru. I'm very long in Buru, but I see lots of other opportunities in the sector. So one of the things that you look for to start with, of course, is board and management. Is the board a bunch of compliance-driven box tickers, or are they actually there to drive value into the company? Well, we're very fortunate our board is in that latter category, all very experienced, all very focused on putting value into the company. Then I look at the balance sheet and the commitments. We're in good shape. We've got 20-odd million dollars on the balance sheet, and essentially all our activity going forward is discretionary. So we're not facing a big commitment that's going to wreck the balance sheet. We're able to manage our cash. And of course, in this environment, managing your cash is absolutely essential. So then we look at quality of assets. Our core business is oil and gas. As was mentioned, we have a couple of side hustles. I'm not sure I quite would like to refer to them as that, but I guess that's the terminology that people understand. So our core business, we produce oil from conventional reservoirs at our Ngani field in the Canning Basin. We have a gas development, appraisal and development project on a very large gas discovery that we recently made in the Canning Basin. And importantly, we operate for 3 joint ventures. We've got a lot of corporate strength, and that gives us the ability to operate for companies that bring a lot of strength to our business as well. So looking at each of those assets, if we look at the Canning Basin, our exploration and production activities there. And we also have a exploration and CCS project in the Carnarvon Basin. So in the Canning, we've got a very large acreage holding, 22,000 square kilometres. As I mentioned, we're a long-term experienced operator in the basin. We're an operating company. We operate for 3 JVs for major companies, for Origin, for Rock Oil, and also for Mineral Resources on our CCS project. So we're obviously bringing some skills that these companies like. We had a pretty good drilling program in 2021, made a major gas discovery, 50% success rate. Our 2022 program has basically been focused on commercialisation of our gas discovery. The Yangani oil field, oil is something that people are very happy to buy off us at the moment. Price is close to $100 a barrel for Brent. We get a nice premium on Brent. It's a modest production stream at the moment. We're doing about 650 barrels a day. We have 50% of that through and our partner Rock Oil, and we operate for our partner Rock Oil. We've just increased production quite substantially by a workover on one of our wells, and we're looking to optimise production and also drill some more wells to get production up. Of a lot of importance to us, obviously, is our recent gas discovery in the Canning. We've been looking for this for some time. The key to it is that it's a conventional oil discovery. We have a huge unconventional gas endowment in the basin, and obviously developing unconventional resources in Western Australia is still subject to further regulation. So a conventional discovery has been a great outcome. Had relatively modest flow rates compared to what people have been seeing in the Perth Basin, 7.6 million a day, but that was only one of 3 zones in the well. So we're confident we're going to be able to get that up substantially. Of a lot of importance is that there's about 40 barrels a million of condensate. And again, the Perth Basin discoveries of 5 to 10 barrels a million. So there's a very large endowment of condensate in this field. Condensate, as you know, is a light oil, and it's a very valuable product that comes out with the gas. This year, we had planned to do some additional activity. We've had some difficulty getting our joint venture aligned, so we've been focused on commercialisation. Our JV partner in the asset is Origin Energy. So I'll move on to our side hustles. We saw that we were going to need to participate in the energy transition business, and we have 3 subsidiaries that are working on that. 2H Resources, which looks at natural hydrogen, Battery Minerals, Batmin, which is searching for lead zinc deposits in the Canning Basin with some success, and Geovolt, which is embarking on a major CCS pilot program. So 2H Resources, there's a lot of additional information on what we're doing with 2H in our main corporate presentation. Hydrogen's been found in lots of wells in the past, and of course it was looked at as just a byproduct, basically. What do you do with hydrogen apart from put into an airship? And of course now it's a very well sought after future fuel. So going back, looking at a lot of the old wells that were drilled, a lot of them had very high levels of hydrogen in them. We picked up a very large acreage position in South Australia where there's hydrogen wells that have been drilled in the past. And it's also an area that has very good regulation for what we're trying to do in the natural hydrogen space. that's in an early stage, but we're a pioneer in it, and we have a lot of internal expertise to drive this forward. Potentially, there's billions of kilograms of hydrogen recoverable from this acreage, and any of you who've followed what the hydrogen market looks like, that translates into billions of dollars of resource. So it's a very, very interesting project. GeoVault, the CCS is going to be a very important component of trying to get to low carbon activity, particularly for industries that are hard to decarbonise, and there's lots of those. So we've taken the initiative here to start a project to put together a pilot project in our Carnarvon Basin area, and we've been very fortunate that the Commonwealth Government has offered us a $7 million grant to do that work, and that's been matched by our partner in this project, Mineral Resources. So we have a $14 million pilot project that Buru has essentially carried through. And then Batmin, hopefully you like the logo. This was basically put together because we kept seeing big, thick sections of lead zinc mineralization in our petroleum wells, but they were deep, so well below commercial mining depths. So we thought, well, okay, let's put our geological hat on and go and see if we can find some of this stuff at a shallow depth. So we pegged some areas in concert with a company in the mining business called Cooper Resources, and we're just in the middle of a drilling program for that. Our first two holes have found big, thick intersections of sulfides. The second hole in particular had 38 meters of what looked like very high lead and zinc intercepts. So this has turned into a pretty substantial side hustle. So to sum up, our core oil and gas business is in good shape, making good money out of our oil production. We've got a very, very interesting gas discovery and a lot of prospects to follow up in the Canning Basin, and also a drilling program in the Carnarvon Basin. And our energy transition businesses have gone from inception to having real value over the last couple of years. So we've got a nice rounded portfolio, and we've got lots of activity going on. So thank you very much for your attention.
Eric, can you do me a favour? Can you stand about the second step down, because I'm so short, maybe the third, and then turn around and face me, because I want to get a shot of you for your last ever presentation. I think it would be nice. All right, let's see how we go. And you've got a halo behind your head as well. That's why. Who thought up the Batman logo? Because I really like that Batman logo. That was pretty neat, wasn't it? I enjoyed that. And Thomas, down the back there, when you put your hand up, 700 people who are now watching from our live stream know what the back of your hand looks like. So they can identify you from the back of your hand, but I'm sure they look forward to seeing you next year. Okay, as we all know, sometimes it is the success of a project that owes a lot to its location, proximity to markets. ADX Energy is in the right spot at the right time. By virtue of their location, they've been in the position to provide much needed energy in Europe as the region grapples with the Russia-Ukraine fallout and all that ensuing shortage of a supply of oil and gas. So cooking with gas, the man his team members refer to as the Greek chef has joined us. Yes, that is a reference to his skills in the kitchen, but on this occasion he is here cooking up for ADX Energy. Would you please welcome Ian Tchacos?
Thank you very much. And it's always hard to follow up after Eric, and he's very exciting talk from him, but sorry. No, not for much longer, but hopefully our assets will do the talking. It's been a while since energy security has been a major concern, and the heat is really on, not just for cooking. What we're seeing differently this time from what we've seen as the past, in many of the majors are paralysed between producing oil and gas now, exploration and transition. So I think that opens up some very unique opportunities for a small company like ourselves. There's a disclaimer statement up front. You can read it at your leisure. So ASX is ADX is an ASX listed company in Europe. For a while, I think we've been out of sight, but now with what's happening in Europe, I think we're no longer out of mind. We're showing ESG up there front and center. This is not just, to be a good boy. It's actually, essential, or girl. It's actually essential when you're operating in Europe. And it's not a nice to have, it's actually a have to have for us. Banks will, first of all, want to see your balance sheet and your cash flow. The next thing they want to see is your ESG strategy. We're very fortunate. We've got a growing reserve base. We've got a nice stable cash flow in our Vienna Basin oil field, but then we've made a recent discovery, and we can now complement that with high impact gas exploration and very complementary renewable opportunities. In our case, our renewable opportunities are not, if you like, sideshows. They're actually very much front and center, and we really see them as upcycling our existing asset base. So we operate in multiple European jurisdictions, but I have to say right now our focus is very much in Austria. We're very well established there. We've got the people on the ground, we've got the assets, we've got a very good database, and very importantly, we've got very good access to infrastructure, which is great when you're an exploration and production company. And it gives us the fastest pathway to cash flow, and we believe that's absolutely critical. Just giving you an asset snapshot, there's really three key elements to our business. Production, we currently produce around 280 barrels a day of long life production in our Vienna Basin assets. We've got about 1.8 million barrels. Our recent discovery, the Anshoff discovery, tested around 130 barrels a day, but we expect to improve on that significantly. Exploration, we've got a massive gas prospect to drill this year. About 800 BCF is our best case estimate, but we've got about 72 million barrels of oil equivalent in a very deep oil and gas portfolio supported by excellent 3D, over 1,000 square kilometres acreage. And then our renewable projects include complementary green hydrogen project associated with our Vienna Basin field. Also, we're looking at installing 2 megawatts of solar power for our own use and putting into the grid. And then in Upper Austria, we've done feasibility work on a 16 megawatt geothermal project. So I think we're very well placed for Europe's gas crisis as well as future transition. I don't know how many of you watch, have you been paying attention, but it's a comedy I like. Unfortunately, the European gas price is not a comedy. It's actually a pretty difficult situation. But it's not just the Ukraine invasion that caused this. It actually started in 2021, where you can see gas prices started to ramp up already then, up to nearly 100 euro megawatt hour, which is about 3 times the highest gas prices you'd see in winter. Now we're looking at a situation where gas prices are absolutely eye-watering. In August, we saw about 420 BOE per barrel oil equivalent gas price. But when you look at the futures curve, you can also see that gas prices over the next 5 years are at about 100 euro megawatt hour. That equates to about 30 US per MCF, about 10 times the US gas price. So I think what the market sees is this is not a problem that we're going to solve quickly. LNG will help, but that will take time. So, when you look at, a BCF of gas that's virtually worth 100 million, that is, rather worrying. Okay, so you might ask, well, what's an Aussie battler doing in Austria? Well, we're not there for the skiing. We're really filling the void that the majors have left behind. we bought assets from a company called RIU, which was previously a consortium of Mobil and Shell. They got out of the business. They were taken out by 4 gas utilities. And after spending about 100 million euros on 3D seismic and a success rate of around 50% onshore in Upper Austria, they decided to give the game away, and they walked out, and we've been lucky enough to walk in. So, it's a very good position for us to be in. We're in a tiny country. It's in the heart of Europe. We've got excellent infrastructure that we've negotiated access terms to. And it's a country that surprisingly produced over 1 billion barrels of oil and 3 TCF of gas. So it shouldn't be out of mind. But we drilled the only exploration well in 2021. It was a discovery. And obviously that also shows where the industry has been in Europe, where essentially, Europe is now suffering a hangover due to getting drunk on Russian gas for decades. So unfortunately, Europeans, other than the Norwegians probably, have not really been exploring, and that's the reason we are where we are today. So just looking at our Vienna Basin oil and gas fields, what you see there is a beautiful oil field. It's very well maintained. It's been producing for over 50 years. It produces long life oil at around 280 barrels a day. We haven't seen any decline in the field since we bought it 2 years ago, but it's not really an oil and gas field. What you were seeing there is a future energy park, because what we also have there is only 70 kilometres from Vienna, which wants to be a green energy hub. We've got 13 hectares plus of land, which we own. We've got very good fiscal terms, but we also have depleted gas reservoirs. We've also got some of the biggest wind parks in Austria surrounding us, and we also have access to the gas pipeline network that we currently feed into. And as of July of this year, you've been able to put up to 10% hydrogen into the gas pipeline network. So we've got all the ingredients we need for hydrogen storage. And we also are looking to install a solar farm, because we've got about 24 pump jacks, and we want to actually supply some of that power with green energy and also put power into the grid. So what we're hoping to create there is not a depleting oil field, but if you like, a transition poster child. So we're not just in the Vienna Basin. What you see there is a map of Upper Austria. We're on the side closest to Germany, in the Molasse Basin. And what's significant about this is we've been operating on around 3,500 square kilometres of 3D seismic, which was acquired by RIU. When they walked out of the basin, they gave us access to this seismic database and about 100 wells, which has enabled us to walk in and within 12 months, develop a portfolio of drilling prospects, drill our first well, have an oil discovery, and in October we'll be producing. Now I can tell you there's nowhere on the planet that you can do that, other than maybe the US. The only difference here is we're the only explorer in the basin, which is just ridiculous. But anyway, it is what it is, and we hope to take advantage of it. But it's not just, if you like, the Anshoff oil discovery. We're also blessed, as I said, with a very deep portfolio of prospects, and we plan to get drilling those. And we also have a real game-changing potential gas opportunity in the Calcareous Alps that you'll hear a lot more about in the next 6 to 12 months. So Anshoff was a very good discovery for us. Obviously, it's very nice to walk into a new country and then quickly have a discovery with your first exploration well. We drilled the well right at the crest of the structure. Basically, the first well we drilled has validated a structure that's around 25 square kilometres. Now, obviously, we've just pinpricked the very top of this thing, but we were able to test 130 barrels a day. More importantly, under the Austrian jurisdiction, we're actually able to get into an early production system, which will be able to deliver cash flow as of next month. And what that'll mean for us is about a 30% increase in revenues and production. We've got access to infrastructure. It's Brent equivalent oil. And what we're planning to do is hopefully book some reserves around that, which will also help our reserve position. But we're also looking at drilling 2 wells from the same location. The Anshoff 3 well was actually drilled on a location with 3 well slots. We're a bit crazy. We drilled the 3rd well slot first, but we did that because it was furthest away from a forest. And while we got the opportunity to cut down some of the forest, we were able to move forward and drill the well. So that's all good. But what's more important is as we go off the structure, you can see what we see prognosed based on seismic, and also, if you like, the offset wells is a much greater thickening of the Eocene sandstones, which should deliver much higher productivity. And what we're anticipating in the next 12 to 18 months, we'll be able to get production rates up from about 100 barrels a day up to around 1,000 barrels a day with that drilling. All right, well chow. Well chow is a very exciting opportunity for ADX. So we basically picked up where IMV left off in 1989. What's unusual about this compared to the rest of the portfolio is there's no state-of-the-art 3D, but what we do have is excellent surface geology. We've got the state-of-the-art structural modelling, section balancing. Any of you have looked at places like Kurdistan would know what that's all about. But more importantly, we're only 3 kilometres away from about a 400-metre gas column that was discovered by OMV in 1989 and tested, and it had sweet gas with over 30 barrels per million standard cubic feet of condensate. The well is cheap to drill. It's about 1,100 metres, we anticipate, to top reservoir. And obviously the opportunity is huge with a BCF equivalent of 800 BCF. And as you remember, 1 BCF right now is worth about 100 million US. We don't need that. We could be very happy with about 1/10 of that, but if this works. So we're very excited about this. It's analogous to some of the major discoveries in Kurdistan and Italy and PNG. And we hope to be drilling this within the next 9 months. All right, well, what you see here is a pretty complex flow chart. Essentially what we're looking to do is, as I mentioned earlier, we've got depleted reservoirs in our Vienna Basin assets. What we're looking to do is basically take power from the surrounding wind parks, inject hydrogen into these reservoirs and prove up their capability for hydrogen storage. Because the hydrogen economy is absolutely going to need storage. Without storage, it's going to be very hard to develop economic hydrogen in any jurisdiction. And we're right on the axis of, if you like, the hydrogen network there. I'll let you look at this at your own pace on our website. We were also developing and maturing a geothermal project in Upper Austria, right next to Bavaria, where the industry is much more mature. And then finally, this is our activity chart. Now, obviously, it looks pretty complicated. There's a lot going on, but really the sun's shining and we're making hay. We'll be drilling at least 3 wells, 2 Anshoff appraisal wells, development wells, and the giant Welchow gas prospect. But based on the very strong support we're getting on our farm out program, I anticipate we'll probably be drilling at least another 2 gas wells in the coming 12 to 18 months. So it's an exceptional program, and please watch this space. You can see a lot more of this on our website. All the best. Thank you very much.
And Tchacos, I think you did very, very well. Thank you very much, sir. Right. We've got 3 presentations to go before lunch to whet your appetite with. A little bit about this next company or this next group and who's investing it. There's the general public actually holds 52% stake in our next presenter. That's pretty substantial. suggesting it's a fairly popular stock. Institutional investors have got a fair amount of stake in this group as well. It's Empire Energy Group. So I suppose the question is, have they got it right? Is it something that we would like to translate our dollars into? This fellow here is Alexander. Excuse me, she's the full name your parents gave to you, Alexander Underwood. He's the MD. He's also spent a couple of years working with the Commonwealth Bank, haven't you, in resources, Macquarie as well. So you've got a bit of a passion for this particular field, and he's translated. Now he's out there doing it himself in the field. So let's hear what he has to say about this group and whether it will have an impact on whether you put it into your portfolio. Would you please make Alexander very welcome?
Thank you very much. And I hope we've got it right, because I've put quite a bit of my own money into the company. But anyway, so yeah, Empire Energy, we have a very large position in the Beetaloo sub-basin. The Beetaloo is the third largest shale gas deposit on Earth. As Mr. Beetaloo, Dave Close, was telling us yesterday, tens of TCF of recoverable resource. What we are all focused on as an industry right now is demonstrating that these enormous volumes of gas can be commercially extracted. And at this relatively early stage in the appraisal phase of the basin, the signs so far from a number of wells that have recently been drilled are looking highly encouraging. We're listed on the ASX. Our market cap's a couple of $100 million. We've got about $38 million cash in the bank and a very high quality shareholder register, in my opinion. So Paul Fudge is our largest shareholder, of Pangaea Resources fame, a very successful unconventional gas investor from the Queensland coal seam methane days. Dale Elphinstone is our second largest shareholder. Dale, in my opinion, is one of the great Australians. He has built a very successful manufacturing business out of Tasmania. Dale sat on the board of Queensland Gas for 9 years from the very early days. So he really understands the way that commercializing unconventional gas projects can create enormous value. Brian Sheffield is a very successful US oil and gas figure. He has invested in a number of small companies in this basin, including Tamboran Resources, Falcon Oil and Gas, who are Origin's JV partner, and us. Brian founded a company in the Permian Basin in West Texas called Parsley Energy and sold that about 18 months ago for $4.5 billion US. And he sees the potential of the Beetaloo. We also enjoy the support of Macquarie Bank, where I worked for about 10 years, and it's good to see some of our Macquarie Bank friends here today. And critically, our board have invested heavily in the company with our own capital, which I think is really important in terms of aligning interests. So Dave mentioned a bit about the Beetaloo yesterday, and I thought I'd just provide a bit more detail. So, you know, the Beetaloo is demonstrably Australia's largest undeveloped gas resource. There are a number of stacked shale gas plays within the Beetaloo. There's a play called the Kyalla Formation, but it's the Velkerri Formation that we are all very focused on. And within the Velkerri, there are 4 stacked pays: the A shale, the intra-AB or lower B as some call it, the B shale and the C shale. The B shale alone has over 500 trillion cubic feet of gas in place. So these are truly enormous resource numbers. You know, clearly we're not going to recover all of that gas, but if we can recover even a small fraction of it, this basin can have a material impact on energy security, not just for Australia, but also for the broader region. And in another slide to come, I will show you the connections into markets that will help make this dream a reality. In terms of Empire's resource base, we have a P50 prospective resource booked by Netherlands Sewell and Associates of 43 TCF of gas and 800 million barrels of liquids. And we've converted over half a TCF of gas to 2C contingent resource with a very small number of wells drilled so far. So we're really just getting started on that journey. And as I mentioned, our focus is to convert resource not only from prospective to contingent, but also to demonstrate the commercial viability of the project and book reserves. So we've got a huge footprint. It's 29 million acres, and when I recently met Brian Sheffield, he said that we should put on our slides that, this represents about $7 an acre because they're just mind-bogglingly large acreage areas compared to the US plays. We have owned the areas in orange to the east and north since 2011. We were one of the first entrants into this play, having previously owned shale gas properties in America that we sold at a substantial profit a number of years ago. And about 12 or 18 months ago, we acquired Pangaia's properties on the western side of the basin. The other major and active players in the basin are Origin Energy, Santos, and also Tamboran. Origin drilled its first horizontal well back in 2015. That well, as Dave was mentioning yesterday, produced about 1.1 million cubic feet a day from only 4 or 5 frac stages. Santos, with their JV partner Tamboran, have just had some really encouraging results from 2 fracked horizontal wells. I'll soon step you through the results of our first horizontal Carpentaria 2H. And also Tamboran will soon be drilling their first horizontal well, and we wish them all the very best of luck. Again, just to put these resources into perspective, obviously we are comparing prospective resource bases here with reserves and contingent resources. So it's not an apples for apples comparison. But, I think it's helpful for people who invested in the coal seam methane industry a decade or so ago to see the resource potential of this play. And it is truly an enormous resource. Fracking is considered by some, less informed people as a bit of a dirty word. And what's critical in terms of our social license to operate as an industry in the Beetaloo Basin is that we have bipartisan support at both the Northern Territory government level and also the federal government level. In 2018, there was a 2-year moratorium on fracking in the Northern Territory, which came to an end. It was an incredibly detailed and broad review of all of the risks and benefits associated with fracking. It was independent of government. There were lots of scientific experts that contributed. All of the various people of the Northern Territory who wanted to contribute were given the opportunity to do so. And the final report of that inquiry found that fracking could be done safely if adequately regulated, and the regulations are now in their final stages of being put into place. The former federal government recognised that there was a gas shortage coming, and so they provided capital support under the Beetaloo Cooperative Drilling Program. We were the first company to receive grant funding under that program, which offset 25% of the cost of up to 3 wells, and we've drilled one of them and we'll be drilling the next 2 later this year. And Tamboran also has received funding. Critically, we have continued to receive that grant funding under the new government. And also the new government has committed $1.5 billion to the development of what is called the Darwin Middle Arm Sustainable Development Precinct. And essentially this will involve building LNG infrastructure in Darwin, but also or complementing existing infrastructure, but also making Darwin a major carbon sequestration hub. In terms of what we've been doing as a company, we shot our first seismic program back in 2019. We drilled our first vertical well, Carpentaria 1. Thereafter, we did a 4-stage frack in that vertical well, and we got around 350,000 cubic feet a day. As expected, the B shale was the most prolific producer of those 4 zones. And so then late last year, we drilled our first horizontal well, Carpentaria 2H. The challenge we set for our drillers was to get at least a 1 kilometre horizontal section, and they got to 1.35. And we recently carried out a 21-stage frack on that well. It was quite a sort of an R&D type frack in that we tried different fluid systems, different perforation designs, and we've run chemicals traces across that horizontal well bore, which we haven't seen the results of yet. But it's about optimizing fracking. And if you look at the US experience, the increases in productivity over the years, which continue to this day after thousands and thousands of wells, have all been about gradually optimizing frack design. irrespective of the fact that this was an R&D type well, we were really excited about these results because they're getting quite close to economic thresholds already. And as we analyse the results of this well, we will then be adjusting our frack design into the next well, and we'll be fracking in December. I'm aware that I'm nearly out of time, so I'll just quickly touch on path to market. So there is already an existing pipeline through the basin that can take about 25 terajoules a day. We've signed an MOU with Power Water Corporation, who owns that pipe. They are very keen to be buying more gas because the NT is structurally short right now. The longer term plan that we envisage is under an MOU with APA Group, which would involve the construction of large pipelines to both to the north to Darwin to complement LNG export and to Australia's east coast. So that's exactly my time, so I might stop there.
You're on fire. Well done. Would you put your hands together, please?
Thank you.
Yeah. I didn't want to say that you guys had about 16%. I thought I'd let you go for it there. But yeah, interesting. Thank you very much for that talk. Now, look, we continue to hear about that shortage of oil and gas in Europe. Britain obviously is in the same boat, and the issues for them of sovereignty, ownership over oil and gas supply is a really big topic. And they're about to go into their winter. And as they say, you can have all your net zero plans you like, but when you want to switch that switch on and get warm and have some hot water, etc., you want it there and then. And you need to find a solution. So Hartshead Resources is being looked towards to provide said solution. Mr. Chris Lewis is Managing Director. I have not really had a chance to do a proper catch up with him, so I am as interested as yourselves in hearing this talk firsthand. Would you please make him very welcome, Chris Lewis, on behalf of Hartshead Resources.
Wow, these lights are bright. Thanks for staying around before lunch. I'll try and keep this painless. I just need to work out how to move through my slides. Which button do I need? The green button. Oh, easy. Okay. I won't labour too much on our disclaimers and forward-looking statements. They're all available from the presentation off the website. What I will do is give you an introduction to who Hartshead Resources are. As well pointed out, the UK is in the middle of not just a gas crisis, but an energy crisis that's throughout Europe. Hartshead Resources are developing gas fields in the Southern Gas Basin in the North Sea to provide gas into the UK energy system. We own a single license, 100%. That's license P2607 in the Southern North Sea. It contains 5 contiguous offshore blocks. And within those blocks, we have multiple opportunities for fields to be redeveloped and exploration opportunities. Our phase 1 is 2 fields. Both have historic production from single wells. Those single wells produced roughly in aggregate 60 BCF of gas, and we have about 600 BCF of gas in place. So our phase 1 represents 2P reserves of about 300 BCF of gas to be recovered. Our phase 2 follows on from phase 1. It's also 2 fields to be redeveloped, also with historic production. That's another 140 BCF of gas to be recovered. And then we have an exploration portfolio of about 340 BCF of gas. So if you count our reserves, contingent resources and prospective resources in aggregate, we have nearly 800 BCF of gas of resources to be recovered, which is a significant resource base when you're starting to look at the energy requirement in the UK going forwards. And particularly in the UK, we are very dependent on imports. We need more indigenous gas, and Hartshead hope to play our part in providing that. We received the license P2607 at the beginning of 2021. We have spent the last 18 months assembling a very high quality project delivery team. I'll go on to talk a little bit about the project and what we've achieved, but we have a very experienced development manager who's delivered over a dozen small gas field developments in the Southern Gas Basin. We have a commercial manager who's negotiated gas transportation and off-taking agreements in the Southern Gas Basin. The last one he did was with Shell. We have a subsurface manager who has executed very similar developments to ours in the Southern Gas Basin. So we have a team of people in the UK that have been there, seen this, and done it before. And that's very important in terms of delivering, particularly our phase 1 development plan. You can see there that we have an incredible resource base, but you can also see that we are a critical part, not just of the UK's energy security strategy, but also the energy transition. Our gas will be going into the Bacton reception and processing terminal in the UK. And the UK government have spent the last 2 years looking at that area becoming the Bacton Energy Hub, a centre for offshore wind, blue hydrogen, green hydrogen, and offshore CCS. And we see potentially our gas being delivered into Bacton as being a very important part of the energy transition and potentially fuel stock to blue hydrogen. So a great resource base, a great team, a great position to be in an incredible market. So we think right place, right time. There we go. And talking about the gas market, I think you all probably know what's going on Saturday evening. I turned on the TV and there are articles on the Australian news about UK gas prices. It's pretty phenomenal. Even before the terrible events in Ukraine, we saw gas prices start to spike, and you can see some of the gas price spikes on that graph. This is really to do with stability of supply to gas to Europe, very, very dependent on imports, not just Russia, but LNG, Qatari gas, gas from Norway. The issues with getting hold of those exports and the vulnerability of the energy system has really started to push prices up before the invasion of Ukraine. Obviously, invasion of Ukraine has had a terrible effect on the gas markets, but this is going to be a structural shift in energy pricing in Europe, because countries in Europe now have to start looking at having sovereign control over their energy security and not offshoring that to Russia or Qatar or America or anyone else. And we need to build our own internal energy systems in the UK and in Europe that can provide us with the energy we need. And that will inevitably probably mean more expensive energy, but we need to make those investments. We see a structural change in gas prices. And I've got to be honest, I don't want to see £5 a therm long term. I think £1 a therm is where we'll probably end up. If you think about our phase 1 project, 300 BCF of gas is 3 billion therms, roughly. So at £1 a therm, the revenue from our phase 1 will be about £3 billion. So incredibly valuable project in a very interesting gas market. Sorry, button's not working. I'm pressing it and nothing's happening. It is this one, isn't it? Oh, there we go. Why don't you just stay here, and it obviously makes it work. Yeah, I know, right? So this is our license footprint. You can see where our phase 1 is. It's the 2 red blobs, the Anning and Somerville gas fields. As I said, both of those fields have had historic production. So we have very little subsurface uncertainty. Between the 2 fields, there are 7 well penetrations. 4 of those wells have over 200 foot of core through the reservoir. We understand the reservoir very well. They both have good 3D seismic data coverage, so we understand the size of the accumulations very well. And they both have historic production and well tests. So we can build high confidence static and dynamic models. We can history match those models, and then we can really work out how we're going to develop these fields. One of the questions I often get is, why haven't these fields been developed before? Well, they were owned by a super major. In terms of materiality of resources, probably not that significant, and they are slightly lower permeability than the easier fields around us. But we are going into these fields deploying horizontal extended reach multi-frac wells. We have an analog field next door to us called Clipper South, where that has been deployed successfully. And our subsurface manager was the lead development manager of Clipper South. So we're taking proven technology deployed in the basin with identical reservoirs to produce from our phase 1 area. You can see phase 2 further up to the north. That's 140 BCF again. 2 fields that have multiple well penetrations, 3D seismic data coverage, well tests, and well logs. And we understand these fields. We need to do a little bit more subsurface work on these fields. They'll go into field development planning later this year. And then a really interesting portfolio of exploration opportunities. And one thing that's really worth focusing on is when we put our phase one infrastructure in place, a lot of these exploration opportunities become infrastructure-led exploration. These can be drilled, tied back, and monetized very, very quickly. We have 4 prospects near our phase one. In aggregate, they represent an additional 200 BCF of gas. 2 can be drilled from our phase one platforms. The other 2 can be tied back subsea. So we can bring these on as part of our phase one development very, very rapidly. So potentially our phase one could transform quite quickly into half a TCF of gas in a success case with these 4 exploration prospects. You might have to come and stand over here again. Oh, there we go. So what have we done with the assets that we got? And we were awarded these through the 32nd licensing round in the UK. We received the license award provisionally in September of 2020 and got the final paperwork in January of 2021. And we've spent the last 18 months really focused on delivering phase one. When we set out, we said we'd do a number of things by the first half of this year. That was identify our optimum development concept. So frac placement, well trajectories, facilities infrastructure, pipelines, offtake route. We've done all that. We submitted our concept select report to the UK government in May of this year, and we got it approved within 6 weeks. Now, that's quite remarkable. I have seen companies take over 12 months to get a concept select report approved. And I think that speaks volumes to the requirement for the UK regulator to start making approvals more efficient. We need to get these gas fields on stream as fast as possible. Nobody wants to take 12 months getting through an approvals process for a development concept. So we submitted that and got approval within 6 weeks. That development concept we also put in front of our reserves auditor. When we started with the license, our phase one was 220 BCF of 2C contingent resources. Following evaluation from our auditor, where we could show them the entire development concept from the reservoir to a sales point, we now have 300 BCF of 2P reserves. Our reserves auditor came back and said, as far as they're concerned, that our phase one is justified for development and has a 100% chance of being developed. So this project is happening and this project is real. What we also delivered was an offtake route. One of the things that the previous owner operator did was removed a lot of the infrastructure in place, but we are surrounded by a lot of very usable infrastructure owned by other owner operator groups. We have identified a single gas transportation and processing route that will take our gas down to the Bacton terminal. And so we are now in an engineering study agreement with Shell to define the engineering around a tie-in with the Shell infrastructure, and Shell will transport and process our gas for us down to a sales point in the UK. We will continue to own the molecules. We'll be a customer of Shell's. They will look after our molecules and we'll pay them a tariff on top of our gas for that transportation. We've been working with Shell for about 12 months to achieve this, and that's something we were very pleased to announce quite recently. So everything we said we would do at the beginning of last year, we have done, and we've also seen a significant increase in the resource volumes as part of our phase one. What do we do next? I think one of the key things that we've just started to look at, and we started a process at the end of June, is start to, I guess, fill in the last part of the puzzle for our phase one. So we have a development plan, we have an offtake route, we know how to get our molecules to market. We need the development capital to do that. So we've launched a divestment process. We're looking to secure an industry partner to buy a significant stake in our phase one development. And that divestment should allow us to put in place the majority of our required development capital. And just to talk round numbers, we've got a company very close to us, Independent Oil and Gas, who are now in production, but in 2019, we're in a very similar position to we are in today. They went through a partial divestment process. They sold 50% of a small gas development project to a company called Cal Energy, who are funded by Berkshire Hathaway, so Warren Buffett, and they achieved a sale multiple of roughly $3 per barrel of oil equivalent. And that was when gas was trading at about 40 pence per therm. We all saw the graph earlier. Gas, I think on Monday or yesterday, was about £5 a therm. We see long-term gas pricing at being 80 pence or £1 a therm. So a very different gas price environment when IOG achieved $3 per barrel of oil equivalent. We believe we're targeting roughly $5 per barrel of oil equivalent. And what does that mean for a divestment on phase one? Our phase one is roughly 50 million barrels of oil equivalent. If we sell down 50% of that, that's 25 million barrels of oil equivalent. That's $125 million. That will get us to first gas on our phase one development. So the partial divestment process we have underway right now is very important in terms of putting the first tranche of our development capital in place. What it also means is we will have an industry view on the value of our asset. We currently trade around about on market an implied value of roughly $1 per BOE. And we're talking about industry looking at this and saying it's worth $5. So we see not only the transaction that we're looking to achieve as allowing us to put our development capital in place, but a significant re-rate of the valuation of the asset and the share price on market. We're looking to conclude that transaction towards the end of this year. Certainly, we're very busy on it at the moment. We have a good number of companies in the data room, and that's really our focus for the next 6 months. We're also focused on the next steps of engineering and environmental work. We've been out to the market looking at quotes for front-end engineering and design and for environmental surveys. That will lead us to submit our FD field development plan early next year and take final investment decision on our phase one middle of next year. That sees us putting platforms in place in the North Sea in summer of 2024 and first gas towards the end of 2024. It's a very near-term gas for the UK gas market. And I think because of that, we've got a very, very active data room. I could talk all day about this. I'm conscious I've got about 2 minutes left. I'm not sure I'm going to say much more because I like to leave a bit of time for questions. But I think just what's worth pointing out is what our offtake route looks like. So this is a cartoon of our development plan. You can see 2 minimum facility wellhead platforms. They are ultra minimum facility. So we have very low power requirements on platform wind, on platform solar. And then that goes through the Shell network down to the Bacton reception facility. So you can see this is a very real, very low emissions, very low impact, very high value project that is happening now and delivering first gas in 2024. And I think I'll leave it there.
You got 35 seconds. Is there a 30-second question out there for your opportunity to invest in Britain? Anyone? I'll race down with the microphone. Do you want to have a private conversation with Christopher later? Yes? Here it's private conversations, Chris. Is that okay with you?
Yeah, that's fine.
Yeah?
Thank you very much, everyone.
Good on you, sir. Thank you. Thanks for coming to present. Interesting, isn't it? Right. Do you know excess gas at the moment on the East Coast can sell for around, I think it's $40 a gigajoule, I think I was looking at. And last year, so this time last year, it was $6.50 to $7.50. So it's a big, massive jump. And with that in mind, I'd like to welcome up to the stage our last presenter in this segment, Cooper Energy. They're hyper-focused, particularly market at the moment on the East Coast. 2022 has been a transformational year for them. They've completed a rather large shopping excursion, added a nice little bit to their basket. There's a lot of opportunity for growth. This fellow here is David Maxwell. He is winner of the John Duran Award, which is associated with this conference. And he's joining us in his role as Managing Director of Cooper Energy. Were you actually here yesterday? Because I got around to see most people, but I didn't see you. All right. So our last speaker yesterday was another David from Argonaut, you may know well, and we put the question to him at the end, didn't we? We said, who would you invest in out of the presenters that were here? He actually said nice things about you.
I might buy him a beer later.
That's right. Well, he's convinced. If you were here last night, he would have bought you a bit free. But yes, he's so convinced us. Would you please make him very welcome, everyone?
Thanks very much. And I'm really conscious that I stand between yourselves and lunch. And if you come from the eastern states, probably between yourselves and a rather large afternoon tea. Cooper Energy's business and strategy is focused, as per the introduction, very much on cost competitive gas supply to Southeast Australia. And we focus in on the domestic market. And it's been this way for the last 10 years. That's been our focus. And it's not an accident. And you can start to see the benefits of that strategy and the reasons why we've been doing what we've been doing over the last 10 years. I'm going to illustrate how we operate and optimize across our 2 gas hubs, which are located close to where gas is needed at a time when supply is very tight, and how we are going about further growing the business. But firstly, before I get into the presentation, I do want to acknowledge for our 2 years for Cooper Energy with the issues that we've had to manage as a result of APA's management of the Orbost gas plant. But now, by far, the bulk of that is behind us, and I'm going to illustrate to you the strength of the position that we now find ourselves in. The standard disclaimer, you're fast readers, so we'll move on. Firstly, to set the scene, and some of this will be familiar to you, but it's not just all about the hydrocarbons in the ground in the market. The emerging themes our energy industry is experiencing and are being discussed every day in the media are there on the left-hand side. The key elements of a successful gas business: you've got to have the resource, you've got to have the infrastructure, you've got to have the market available, and most importantly, you've got to have relationships. And these are relationships with a multiple number of people, number of groups, stakeholders, investors, financiers, customers, regulators. And it's the combination of all 4 that are required for a successful business. And on the right-hand side, there's an assessment of how Cooper Energy measures up. And that's a position that we've put together over the last 10 years. Southeast Australia has a domestic gas shortage. Energy markets are volatile and increasingly unpredictable. Geopolitical tensions are ever present, and there is a global imperative to reduce emissions and transition to new energy. And ESG has rapidly become the gatekeeper to how we do business and access debt and equity capital, which is vital for our business. These themes are shaping what's needed. So how does Cooper Energy go about it? Gas supply in Southeast Australia is tight, and the outlook is it's going to get even tighter. 40% of the forecast supply is from undeveloped reserves. That's the light green that you see on this chart. If capital for these forecast projects is not deployed, the supply gap is larger. As a result, we've seen in Victoria and Sydney, spot gas prices increased significantly over the last 12 months. And as shown in the chart on the right, they were in the $40 range. As at today, Victoria is $18.11 in the spot market per gigajoule, and Sydney $22. And they were this morning's prices. The international LNG price is having an increasing influence on gas prices in Eastern Australia. That's something that the ACCC has identified and they acknowledge. And as much as they don't like it, they do also accept it. And that linkage is now setting the benchmark for gas prices in the future. The outlook is that long-term take-or-pay supply contracts, and these are take-or-pay contracts that are being negotiated now for supply in the next couple of years and typically for 5, 6, 7, 8 years term. The outlook is for those prices to be in the mid-teens per gigajoule. This is a market signal that makes Cooper Energy's near-term growth opportunities even more attractive. And you add to this, we've also got price reviews in our existing contracts, our existing foundation take-or-pay contracts. Some interesting trends are becoming clear in the national electricity market. There's been a reduction in coal-fired generation. We read a lot about that. And this has led to increased gas for power generation to fill the supply gap, especially when there's little wind and the sun's not shining. A consequence of the changes in the fuel mix for power generation is that in the June quarter of this year, the CO2 emissions in the NEM were the lowest ever reported for a quarter. This reinforces the importance of gas and renewables working together to decarbonise the electricity sector. Coal generation in the NEM still accounts for a roughly 2/3, and here I'm talking about Eastern Australia, 2/3 of total generation. In gas equivalent terms, that's about 1,000 terajoules a year. Sorry, that's about 1,000 petajoules a year. So how is Cooper Energy working this opportunity? Our activities and projects over the last three years have completely transformed our business. We now operate all aspects of 2 integrated hubs in the Otway Basin around the Athena gas plant and in the Gippsland Basin around what we've named the Orbost gas processing plant. This is from the offshore to the processing plants and then delivering the gas into the pipeline network. This, together with the relationships that are in place, and that's what I talked about at the start, enables us to optimize across these 2 hubs to maximize the benefits for our customers, our financiers, and obviously our shareholders. And that's one of the key elements for a successful and growing gas business. Wood Mackenzie has illustrated, and this is their view of commercial reserves, it's not our view, in Southeast Australia, their view of commercial reserves in Southeast Australia. And that's illustrated there on the left-hand side in a series of boxes. The Cooper Energy reserves are well positioned relative to others in terms of location, cost, and exposure to the spot price. Cooper Energy is really the pure play in Eastern Australia domestic gas. And it's worth noting that Wood Mackenzie themselves have predicted there's still another 5,000 petajoules of commercial reserves remaining in the southern offshore basins. And here we're mainly talking about the Otway and the Gippsland. And that's equivalent to about 10 years of demand. The recently developed fields and the fields of the future are typically going to be smaller than those of the past. But they're very cost effective and they generate very strong cash flows. And the Sahul project is a great example of this. On the right-hand side, we compare the average realised gas price for ourselves, that's the green bars, with 2 of our peers or our competitors, who are the pink bars, supplying gas into southeastern Australia. This highlights our upside gas price leverage. A quick snapshot on the recent Cooper Energy performance. This time 12 months ago, or in fact 13 months ago, we set ourselves a series of imperatives for the 2022 financial year. That's what we focused on and we delivered on every one of them. These imperatives address the operational and financial areas required to embed a firm foundation built around our 2 gas hubs to deliver the medium and long-term value with certainty. The graph on the right-hand side illustrates the steady improvement quarter by quarter of the Orbost gas processing plant at the same time as the increase in the average gas price received for our Sahul gas sales. This resulted in a significant step up in our underlying EBITDAX last year to over 80 million by the end of FY22. For your information, today, Orbost is processing at 64 terajoules, and the plan is to take that to 68 terajoules in the next month, in the next week, and still have every 3 weeks one of the absorbers down for a clean, at which point the rate drops down to 40. So we are getting up towards that nameplate capacity. You put that together with what we're producing through Athena, and we're operating around about 100 terajoules a day into the gas market of southeastern Australia. In the Otway Basin, and specifically the offshore Otway Basin, and around the Athena gas plant, we're working in 3 key areas. We're looking to increase the production and the cash margin generated from the existing wells, existing infrastructure, and the Athena gas plant. The second area, we're progressing the next step up in production with what we refer to as the Otway Phase 3 or OP3D development. And our plans and work schedule are based on this being online before the winter of 2025. And at that point, the rate through Athena will go up to around 70 terajoules a day. And to put some numbers around it, that's an operating cost of about $2. And you work out the numbers off the mid-teen prices that I mentioned earlier. And the third area, on the back of OP3D, is rapidly adding further production to process at Athena. We have numerous drill-ready prospects available. These are all amplitude supported, which, as many of you will know, means that they're really low risk. In the Gippsland, similarly, we're building our business around the Orbost gas plant, which is now owned 100% by Cooper Energy. And the three areas that we're focusing on here are, firstly, working with APA to transfer the major hazard facility license, so the plant operations then come under Cooper Energy management. The second area is increasing the Orbost gas processing rate with the existing kit that's in place. When I say increasing, we've already talked about 64 to 68. It's getting up and over 68. And the third area is advancing the next wave of development of our own gas resources and assessing the economic viability of also processing others' gas resources through our Orbost gas plant. Across both the Otway and the Gippsland assets, we have a portfolio now of production, growth in production, development and exploration opportunities to bring well over a TCF or circa 1,000 petajoules of new resource to the market. These resources are fully integrated, all operated by Cooper Energy at a time when the market needs more gas and gas prices are increasing. And for our shareholders, it generates a pile of cash. We thank our shareholders, customers and banks for their resilience and sustained support. To illustrate, here is a profile of our production outlook, and we call this our growth staircase. The cash flow profile is even more compelling as gas prices increase and our operating costs decline, as effectively most of them are fixed costs, as the volumes increase. Just to put some numbers around it, at the moment, we're just shy of 10,000 BOEs a day, which is around 3.4 million barrels of oil equivalent a year. Over the next 5-6 years, that gets up to 10 million barrels of oil equivalent per year, or around 30,000 BOEs a day. The combination of all that we have delivered and achieved in FY22 is a growing foundation cash flow, which enables the progress and delivery of the high-value growth opportunities within the existing portfolio across the two gas hubs. And let's not forget our heritage, high-margin oil production. And that here I'm talking about the oil production in the Cooper Basin. That's the thin, dark grey line that you see at the bottom, and what really got Cooper Energy going as a company. Just a couple more slides. Cooper Energy is also building and growing its leading ESG credentials. And this is embedded as a part of our strategy. The growth is being achieved whilst we maintain our industry-leading position of being net zero. That's net zero scope 1, scope 2, and controllable scope 3. That's been audited and certified. To maintain and grow this leading position, we work, and we have made a commitment to that, something we're going to hold to for the future. We're working on three pathways, which are all interlinked. We're maintaining the net zero position, which delivers competitive advantages relative to our peers, particularly with respect to finance and both debt and equity. We're evaluating and pursuing opportunities to further improve the energy and emissions efficiencies at our operating sites. And thirdly, we're assessing new energy opportunities where we have a competitive advantage and it's an important and, it adds value to the existing assets and portfolio. The value of this is best illustrated by the number of banks in our enlarged and highly competitive debt facility and the circa 70% institutional share ownership of our register. And both the banks and the institutional shareholders, they do their homework. So to wrap up, gas is critical and it has a key role in the energy transition. A transition where Cooper Energy is supporting the decarbonisation with its own actions. And we're growing a low emissions profile business as we grow our gas business. Southeast Australia is desperately short of gas. The market opportunity is compelling to invest in new supply for a company like Cooper Energy. Cooper Energy has the assets to grow with the Otway and the Gippsland basins, and we've got significant running room, and we tick all the elements of what's required for a successful business. We've built a solid base which generates cash for growth, and these growth projects are now well underway. We are a part of the Southeast Australia gas supply solution. On that note, thank you, and I'm happy to take any questions and discuss any part of this over lunch.
Congratulations, David Maxwell. Well wrapped up. Go and enjoy your lunch, and I'll ring the bell and have you all back here in about an hour.